Hi everyone and welcome to today's morning report analysis videos with me, Richard Payne, market analyst at Hantec Markets on Wednesday the 11th of April. There's been a continuation of this dollar weakness that we've seen over the last few days really. The trade dispute between the US and China has just started to sort of settle down a touch. We've seen sort of conciliatory comments from not only Donald Trump over the weekend, but now President Xi of China has sort of started to sort of lay the groundwork, I think, for an agreement, and markets have sort of taken that on board. We've seen that the dollar is slightly lower as that has sort of continued to sort of filter through. But it's interesting that the markets are now sort of starting to factor a little bit possibly towards more this the geopolitical issues around Syria. And that's sort of one of the reasons why I think the Treasury yields are not sort of pulling strongly higher on the back of that. There has been a degree of safe haven unwinding, and certainly the gold price has sort of ticked higher. The yen has weakened a touch, but nothing too decisive. And the dollar weakness story is sort of back in the forefront today. A very slight sort of slippage on equity markets today in the European session, as S&P 500 futures have just dropped back a touch, about 0.5% lower than on the S&P 500 futures. And that sort of hit Asian markets a little bit overnight, and subsequently we're seeing European markets lower. But there is a bit of a focus today as we sort of move through on the US once more on inflation. We've got US inflation data today on the CPI, which is expected at 1:30, and the expectation is that it will jump actually to 2.4% on the headline and 2.1% on the core. Now that will be interesting to see if we start to get any sort of upside surprise in that. We saw an upside surprise in the PPI yesterday, suggesting that inflation pressures are building in the States, and that is sort of the sort of general feel that is going to be happening. But it'll be interesting to see whether this has an impact on the sort of longer dated yields, if that is to be the case, because you'd think that yields should be sort of pulling higher now. Now the trade dispute sort of between the US and China seems to be sort of in the process of sort of being sorted out. So inflation this afternoon. You've also got the Fed minutes tonight at 7 o'clock. Again, focus on inflation. How the Fed and the FOMC really sort of views inflation going forward. Is it the pressures building, and that will be the sort of big focus on the minutes this afternoon. Other than that, we've got a little bit of UK data, industrial production this morning. We've had already, should really mention the China data, inflation actually missed estimates quite significantly, linking on the CPI, but also the PPI missed estimates, and subsequently we're seeing the commodity currencies underperforming a little bit today. We're about to have the UK industrial production, which is expected to improve to 2.9%, with a 0.4% month-on-month improvement. And then this afternoon, as I said, you've got CPI for the US at 1:30, and then you've got the weekly crude stock, so watch out for that volatility on oil. The potential for sort of a bit of a geopolitical tensions in Syria blowing up. No pun intended, in the Middle East, has driven the oil price higher in recent couple of days. So volatility is expected on the crude stocks from the EIA this afternoon, and then obviously we've got the Fed tonight. We've also got Mario Draghi speaking today. Mario Draghi is set to speak at 12 o'clock lunchtime UK time, and they'll be expected to sort of give some update on possibly leading on monetary policy moves. Recent ECB members have been a little bit sort of dovish actually, so it'll be interesting to see how Draghi comes out with that. Now, my chart today is Aussie yen. Now, Aussie yen has been an increasingly improving chart in the last few days, last couple of weeks actually, as the market has sort of started to leave higher lows and form higher highs. Now, breaking out above 82.64 yesterday, 82.64 was the resistance last week. That strong bull candle completes a little head and shoulders base pattern, doesn't it? And actually gives you an implied target of around about 210 210 pips. So that sort of brings you certainly back towards this 84.40 old low, 84.50 new high from March. So retest of that March high is easily on, potentially in the next few weeks. Today's sort of slippage back as the commodity currencies have underperformed on the China data could well give you a nice little buying opportunity. 82.65 basis of support now on that neckline, and anything above 82 figure I think is a chance to buy. You've got the momentum indicators which are sort of improving on a medium term basis. Certainly on the stochastic, certainly on the MACD lines, and the RSI above 50, and I think weakness is now a chance to buy. So you can see here on the hourly chart, this is basically just unwound some of the overbought momentum. You've got positive momentum configuration on the RSI, on the hourly, and the MACD lines above neutral. So a little retreat into support is a nice little buying opportunity. I think here you've got sort of 82.45 to 82.95 basis of support. So if that market starts to find support, I think we could be up and away. Interesting that 83.30 was a basis of pivot actually earlier in the year between February and March. That came back in yesterday, 83.37. So breakout above that really does reopen that high again, 84.50. So I wish you good luck in your trading today, and I'll speak to you again later.